Hello everybody, my name is Mark. Welcome to another one of my investing videos. And in this video, I am going to talk about what do you do when things start to not go in your favor? Do you really have what it takes to hang in there, to stick it out through thick and thin, and to try to make some money? So as you know, if you watch my videos, I have a put spread on US Steel, and it is 2 o'clock in the morning, West Coast time. Market opens in 4.5 hours. Today is December the 20th, and this is the news that came out yesterday. US Steel to lay off workers, cut dividend, terminate stock buybacks, on and on and on. And now when we go to the futures, look at the futures, okay? These are after hours. Steel went all the way down to $12.70, etc., etc. Right now, let's go to my transactions and let's go to the put spread that I got going. So here's my latest trade right there. Sold to open, 9 put options, strike price $13 a share at 15 cents, brought in $128. But when we go back to this, already those puts are going to be worth, at least when the bell opens, those puts are going to be worth 30 cents, which is going to put me on the red on those puts. So the question I have for you, and maybe even myself, is what do you do? Do you panic? Do you say, forget this, I'm out, and take a loss? What do you do? And the answer is, if you have a trading plan, you have nothing to worry about. So let's go back to my positions. And here it is right here. So I own 200 shares of steel right now. I also own 2 long call options, $15 calls. And these 9 put options, which are right here, are probably going to get assigned to me. I don't see steel recovering by the end of the day. And so I'm going to buy 900 shares of steel. And that was all in my plan, as I will explain in a minute here. And so that will put me at 1,100 shares, right? And if steel continues to drop, let's go to the chart, okay? I drew little lines about where it's at right now. That blue line is the $12.70 level, and this part that I circled right here, that's the next level that I'm really going to keep an eyeball on. If I see steel drop below that, then that means that this whole big pattern here has all been negated. This earnings has basically just gone to pot, and now I got to see where the new bottom is. So that's what I'm going to be paying attention to, and whatever I see is what I'm going to do. I try to do whatever the charts tell me to do, but charts are not crystal balls. Things can and do always go wrong or unexpected. But that's my plan right now. And so it's looking like that I'm going to end up buying 900 shares of steel at $13 a share. I am perfectly okay with that because look here, I own 9 long puts and I still own 6 more $10 puts. And right now the bid on that is 131. The ask is on 139. And I should probably go to the option chain and look up the delta on those puts. So those are $10 puts expiring in January 2021. And so let's take a look at that delta right now. Okay, so let's go to Greeks. And let's go to January 2021. Let's click on the put. And let's see what the $10 delta is. So I have 6 of them. The delta is 23 cents, negative 23 cents. So times 6, that's another dollar, and what, 6 times 23, $1.20 plus 18, so $1.38. So if steel goes down $1, then I will make another $1.38. So the fact that I own 900 shares of steel, and the fact that, or actually 1,100 shares, will be very nicely compensated by all the puts that I own. And let's look at the delta on the $12 puts. Okay, so the $12 puts, and these are 2022. Those deltas are 30 cents times 9 is 270. So 270, and then what did I say, $1.38, so 3 something. So I will take a paper loss for the time being. But eventually, if steel really goes to the bottom, the 15 put options that I will have, I mean, let's visualize. Let's say steel goes down to $7 a share. Okay, my $10 puts will be worth $3 of intrinsic value. My $12 puts will be worth $5 intrinsic value. So I have 9 of the 12s times 5, that's $4,500. And then 3 times 6 is 2,100. So 45 plus 21 equals 66. I'll have $6,600 of intrinsic value in those 15 puts. And so that will very nicely compensate for the loss that I would take of the $13 a share times 9. Would be $5,400. It would almost, actually, it would even put me up by $100. So let's recalculate this again. $12 times 9, $5 and turn 4,500, and then 10 times 3. Now, no way do I expect steel to go down to $7 a share. So that's a pipe dream. But the point is, I have nothing to worry about, and I have nothing to panic over. And paper losses mean nothing to me, and it really means nothing if you have a long-term trading plan, which I do. So if we go back to my transactions here, and we go back to my positions, so there you go right there. I have 9 long put options at the $12 strike price, expire in 2022. I have these 6 $10 put options, which expire in 2021. I have these 9 short put options, and those are going to take a loss. Okay, I don't care. It's a paper loss, and I still got a whole year to sell the covered calls. And that, to cap this video off, is my whole plan. Is I had been planning all along to eventually buy a certain number of shares. I wasn't sure how many, because if we go back to the transactions here, when I first opened this put spread, the first thing I did was I sold 6 puts, and then the following week I sold 12 puts, and then I sold 9 puts, and that's this week. And this is the week that all this news is coming out, and steel is going to go below $13. Okay, so I wasn't sure. I mean, if steel would have went below the first week, I would have bought 600 shares. If it would have went below the second week, I would have bought 1,200 shares. Well, so I'm ending up selling, buying 900 shares. And then I start selling the covered calls. And because I have the 9 long puts, back to my positions here, these 9 puts, basically what I have is an option caller. I will own 900 shares of steel, and I have 9 leap puts, and I will be selling the $13 covered calls to pay off the difference. And so my position is perfectly fine. The short-term paper losses happen, and I think they happen in any investment strategy. If you just, even if you just put your money in a mutual fund, you're going to have some good days and some bad days. You're going to have some good years and some bad years, right? So that's what I got in store for me when the market's open. So, and now look at this. It's even dropped lower. It's now down to 1252, 6% loss. So it's just getting worse and worse, right? But I have nothing to fear and nothing to panic over. I simply will end up buying the 900 shares of steel at $13 a share, and then I will begin to sell covered calls. And let me check the chart one last time. So this is my zone right here, and it looks like from 1215 to 1252. So it's already touching in that area. And so it looks like that this whole area of trading is all going to get null and void, and now I'm just going to have to look for a new pattern and then trade within that pattern. So these are the things that you will have to deal with if you become an option trader. And you may say, well, forget this and set a stop loss and just get out, take the loss. Or you may decide to load up on some more puts, or you may decide to open up another put spread. That's another thing I could do, is I can open up another put spread and make it a long put spread. Just buy a bunch of long puts and maybe sell half the number of puts, like maybe get, I don't know, 10 puts and sell 5 puts, something like that. There's so many things you can do here. And that's one of my favorite things about options, is that there are so many ways that you can cover your losses and even make more money and make profits based on the new trends and the new patterns of what's going on. So that's pretty much it for this video. Like I said, if things go differently than what you expect, my advice or suggestion is don't panic. Just stick to your plan, and you should be fine as long as you have everything, all the details ironed out. You should have well, first of all, you should have your main strategy, and you should have a stop loss, and you should just have a basic understanding about what you're going to do, just in case the stock does this or that or anything in between. So if you have any questions or comments, feel free to hit the like button, whatever you want to do. Feedback is always appreciated. Thank you for watching. I will see you in the next video, and ciao.